Good afternoon. Good afternoon and Jai Jinendra, everyone.
Jai Jinendra.
So with this, I would firstly like to welcome our JCF's Apex Amrit Porwal, JCF's immediate past president of Mumbai, CA Pradeep Kapadia ji, JCF Midtown Chapters President, CA Pankaj Jain, JCF General Secretary, CA Punit Mehta, all the members of JCF and guests. So very good afternoon to everyone and Jai Jinendra from my side here. I am CA Sakshi Jain and I'm truly honored today before you as your host. So today we are going to be discussing about a very important and insightful topic, which is on statutory audits for companies in India. So as we all know that this is our session number 2 for the Karma Charcha season. This is a season where JCF Midtown Mumbai chapter is conducting interactive sessions on the topics that are of professional. What is going to happen in this series is that we are going to arrange one session every month. So like we all know, we had the first session in the month of July, which was all about income tax returns. So with that session, we successfully, all of us completed all of our returns till 31st July. And this session is all about statutory audits, as we all know. So we see that these sessions are designed in such a way, that they align to our professional calendar. So I would just urge everybody to kindly connect with JCF and attend all these sessions. So I'm going to just list down the topics that we are going to cover for today. So today we will be having an introduction on audit. What all are the importances of audit? What are types of audits? We will also discuss about the various standards on audits that are governing audit. We'll be discussing standards that are governing audit report. We'll be also discussing CARO 2020. And then we are going to have a quick question and answer session. So why this session is important for us, guys? So as stakeholders and decision makers, I think it becomes very imperative for us to understand the significance of the audit reports and the critical role that they are going to play in the financial prudence and compliance. So throughout our session, implications of this regulation, and that will leave us with a deeper understanding of how they are going to contribute robust and accountable corporate ecosystem. So with this, I would really request CA Amrit Porwal ji to address all of us.
Yeah. Jai Jinendra friends, I welcome you all to this today's session of Karma Charcha Season 1, Session 2. Friends, as Sakshi has explained that this Karma Charcha series we have devised basically to update all our fellow members with the professional developments and the day-to-day nitty-gritties of our professional requirements in the mid of various our season of calendar of tax filing as well as statutory audit and other compliances which we need to carry out day to day. So I'm sure this type of session will add immense value to all our fellow members. Friends, I would just like to recollect again, JCF is basically formed with the objectives of fellowship, bonding, professional networking, and knowledge sharing, as well as community service, under the guidance of gracious Acharya Sri Nai Padma Sagarji Maharaj Sahab since 2006. And with his blessings and guidance, we have formed various chapters at Mumbai, as well as Pune, Malwa, Surat, Chhattisgarh, Marathwada, Vadodara, Jalgaon, Akola, and also few chapters are upcoming at Ahmedabad, Delhi, Bangalore, Chennai, Jodhpur, Nagpur, and other places. As you are all are aware that JCF basically consists of Jains, chartered accountants from all sects of Jainism, may it be Digambar, Shvetambar, Therapant, or Stanakvasi. So it's my sincere request to urge all your fellow CA members, Jain CA fellow JCF and become its life member. And not only in the process, they will be immensely gaining by way of the power of professional networking as well as the knowledge sharing sessions which we are holding from time to time. With these words, I welcome you all to today's session, and then Sakshi, you can proceed further. Thank you.
Yes, sir. So rightly said, even I would like to urge everyone to join JCF as soon as possible and let us be a bigger community for within ourselves. So great note. So with this immense pleasure, I would like to introduce the speakers for today. So we have with us CA Ankita, and we have the second speaker is CA Pooja Jain Porwal. She is a value enhancer. So let me have the pleasure of introducing CA Ankita Mehta Surana. So she is a practicing chartered accountant with a proprietor of Messrs. AG Mehta and Associates, which is into direct tax practice. She has been teaching now for more than a decade, and she has taught more than 1,000 students who have been doing chartered accountancy throughout the year with her. She is currently teaching at all the 3 levels of CA course along with her practice, guys. She has also studied to be a company secretary, and she has also completed a 3-year law course from Government Law College, Mumbai. CA Ankita Mehta is also actively associated with a non-profit organization, which is Parva Social Welfare Foundation. And she, throughout her history, she has worked with big corporates and Khaitan and Company advocates. So after this, she started her teaching career with B.Day classes, where she's teaching law and audit to CA inter and CA final students. She's also set up her own proprietorship concern after that, and then now she's into direct tax practice, which is including audits and consultancy. So she is also from a family where there are mostly all lawyers. So a very warm welcome to CA Ankita Surana. Yeah. So, and then we have with us CA Pooja Jain Porwal as our value enhancer today. So I'm immensely happy in introducing her. She's qualified as CA in 2017, and she's presently associated with Bansi Mehta and Company, and she is also a partner. She has an expertise in statutory audits, tax audits, and India's domains as well, since she has handled variety of advisory assignments with large corporates also. So Pooja has a very good set of advisory skills in the field of direct tax and company law matters. Throughout her journey, she's also got a very good exposure in handling income tax matters up to the tribunal level. So with this, I would like to now pass on the floor to both of our speakers and wish them luck.
Thank you so much, Sakshi ji. It's firstly Jai Jinendra Sabhi ko. It is an honor and pleasure to be here at JCF right now. I would like to thank Lord Mahavira and Apne Acharya Nirpadma Sagarji Maharaj Sahib for having this vision of creating something as large as Jain CA Federation, which is connecting CAs throughout the country, nationally, internationally also now. So yes, I take immense pride in being a part of JCAF. Uh, okay. So there are questions popping up even now. So I guess that will be handled by the admin or something. So can we start with the topic, Sakshi ji?
Yes.
Okay,
Yes.
perfect. Thank you so much. Okay, so I think Pooja will keep updating us as we go through the run through the slides. So Pooja, please just unmute yourself and we can, have a conversation as we go ahead.
Yes.
Also, otherwise, if there are any doubts, anything that comes to your mind, you may raise a hand or you may pop the question in the chat box as per your convenience. So I'm going to talk about statutory audits for companies in India. This picture particularly came to my mind when we started talking about auditor, simply because this man here is reading a book, but not just reading a book. He's scrutinizing the book. And that's exactly what we do. We as chartered accountants are so ingrained to keep asking the question how and why that we cannot take anything on face value, right? We've always been taught we are supposed to have a questioning mind, an inquiring mind. We have professional skepticism. And that is what makes us different from other experts in other fields. So this is who we are and this is what we do. We do audit. Now, I'm going to very briefly introduce audit only because it's a part of the topic. I know all of us here know what audit is. It is independent examination of financial information of any entity. Now, when they use the word like any entity, they just, they give us such a wide scope for work. So we are dealing with profit-making organizations, non-profit-making organizations, large listed companies, Fortune 500 companies. We are also interested in smaller private companies, one-person companies, even for that matter, proprietorships, partnerships, HUFs. We give our services to all. So everybody needs a doctor and everybody needs a chartered accountant. This is how important we are. We express an opinion, and that is what is the key word for us. Opinion is basically true and fair view. We talk whether the financials which are presented to us, I mind me, I am not saying what we make. We audit financial statements. So the ones which are presented to us, the P&L, the balance sheet, the cash flow, the notes to accounts, we check whether it gives a true and fair view or not. Initially, in olden days, we used to use the phrase true and correct view. Of course, we cannot hold it true any longer because now with the exorbitant records our client has, we cannot be caught up with 100% checking. And that is why we comment on true and fair view and not true and correct view. We have to be independent. The key word here is independent. Independent basically means we are unbiased. We do not take anything on face value. We always inquire. We always have our own ways of confirming what the client gives us. And that is why our report is so, so important. Recently, Narendra Modi ji said, a CA's signature is more powerful than that of a prime minister. Coming from one of the most successful prime ministers of our country, we understand the kind of importance we hold and the kind of responsibility we take over. Economy keeps changing. Economy keeps getting complex and complex. Times have changed from the stock markets before to the commodity markets now. Everything is changing. What does not change is our ability to help the society to adapt to these changes. And that is what our contribution is as chartered accountants. Particularly, I have immense respect for this man here, Mr. Ratan Tata. And when it comes from him, I feel it has to be true. He says, I need MBAs for running my business, but I need CAs to teach them how to run the business. So when we hold such importance, then we must be careful of what we are signing. A lot of people invest their hard-earned savings in those companies which we certify give a true and fair view, right? Those companies where we give unmodified opinions. Those companies which, as per our certification, get humongous loans. That finally is a layman's money. And that layman is depending on us that we do our audit work well and we give true reports. That is what is expected of us. The importance of audit. To maintain compliance with all relevant laws, rules, and regulations. To keep the books of accounts up to date. We don't keep them. It's because of us that our client will keep the books of accounts up to date. Early detection of misstatements. There are different types of audits wherein like internal audit or a concurrent audit where we are more frequent visitors as compared to statutory audits. And when we frequently visit, the client has to keep the books of accounts updated all the time in real-time basis. And also we can help them early detection of mistakes. Particularly this point is very, very nice. To prevent fraud, as auditors act as a moral check on the employees of an organization. Because the employees know that there is going to be one chartered accountant coming, his team coming, who will frequently go through our papers, go through our work, he is going to be more careful. He is going to avoid making mistakes. To assess and mitigate risk from time to time. You know, at times, the client may be doing something which is very adventurous, which may then result in going concern not continuing for the client. It is important that we flag it. We bring it to the opinion of our client that this is something that may qualify our audit reports. To ensure a business of integrity. This is very, very important. We as independent, honest, chartered accountants ensure that the client's records are also honest. Audited financials are used by owners, management, government, customers, creditors, employees, research analysts, everybody. Everybody who wants to read about a company's financial will ask for the audited financials and not just financials or the budget financials. No. Everybody reads the audited financials. And that is why we have immense responsibility to ensure that we follow our work properly. Moving ahead, we are just introducing ourselves to the different types of audits we have. We are going to take up statutory audit in detail. We have something called financial statements audit, which is done for smaller concerns where we only check their P&L and balance sheet. Internal audit done for larger companies where we go for extensive 100% checking. Income tax audit and GST audits are only called for when the particular amounts mentioned in those acts are hit and we have to get an audit done. Concurrent audits are generally for banks wherein as the transaction takes place, we also do an audit. Secretarial audit done by company secretaries to check for compliance with the different corporate laws and regulations. Forensic audit taking a lot of interest these days by young CAs is because this audit helps them identify problems or helps them identify whether this company should be merged with another or not, or if there is a dispute in a company. If there is a dispute in a company, forensic audit is very useful for collecting evidences for dispute resolution. So a lot of young chartered accountants, like even my students who become chartered accountants, they'll always be like, Miss, I want to be a part of forensic audit. It's so much cooler. It's cooler, okay, you're handling more confidential data, but that also means you have more excessive responsibility. You will have not just an inquiring mind in forensic audit, but also a suspicious approach. You suspect the client to have done something wrong. Performance audit, this is generally done for government agencies where we want to know whether government funds, which are actually common man's funds, are being used effectively or not, efficiently or not. And that is why a performance audit. Management audit, again an audit on the management of the client to understand whether their strategic decisions are good or not. Are they effective or not? Operational audit to see the operational effectiveness of particular operations like maybe supply or marketing or whichever is the weak area of a particular client. Single audit is done when, so if I am a donor, okay, and if I have given a huge grant to somebody, say crores of rupees, I want to know whether that person is effectively utilizing that money or not, is following all the terms of the grant or not. And I take up single audit for that client. Information systems audit. Now today we will all agree that more than auditing the papers, the books, we have to audit the system first. When I was an article, we found such a major loophole in system of a very big broking firm. We saw the brokerage was being counted thrice. So once you count the brokerage, there was a loop in the software which made the brokerage count thrice. So if I made a transaction of 100 rupees, 1% of it should have been brokerage. So the brokerage account should be credited with only 1 rupee. It was credited by 1 first, then 99 pay again 1%, 0.99, again a hit, and then again that deduction amount, again a 1% of that, and again a hit. Now we may think, क्या फर्क पड़ता है? 1 रुपया नहीं 2 रुपया चला गया. Big deal. Not like that, right? It is 250% more than what it should have been. And that is why systems control is more important. Sometimes your books may be fine, but the entries which are auto-generated, they may be wrong. And that is why information systems audit becomes important. A payroll audit or an employee benefit plan audit is again for a very limited purpose, wherein we want to check whether the perquisites are properly being given or not, whether the provident fund contributions or gratuity fund contributions are being made properly or not, etc. This is particularly important now. Environment. Today, everybody talks about sustainable development. You know, even a small concern, like if I go to an exhibition, okay, and if I ask this lady, what is so good about the product that you have made? She'll tell me this is environment friendly. Suddenly, that from 100 rupees, if she's charging me 150, I feel it's okay, it's environment friendly. Who certified? Who said it is environment friendly? There has to be somebody certifying this. Somebody saying that this particular concern is using plant and machinery which is environment friendly, which is emitting lesser carbon into the environment. Somebody has to say that. In foreign countries, environment audit is a big yes. We have something called green reports, which are made in foreign countries, which should be and is actually catching up with the Indian companies as well. Probably in future, we will be doing this audit as well. And we should actually get a hang of this, you know, because it is the future. Very soon, the laws will become systematic. They'll become simple. The taxes will become lesser in terms of, you know, like if they could bring the banking transaction tax, what will we do? What will we do as chartered accountants who have learned so much income tax and so much GST? If one fine day Prime Minister says, abhi banking transaction tax lagai, there is no other tax in the country, then what will we do? We better start finding other opportunities. Okay, let's come to our topic of SA 200, which is the mother of all SAs. I always tell this, you know, if you know SA 200, you know half of the audit. There is not much left. SA 200 particularly, like if we go through the details of this, particularly deals with basic principles which govern an audit. There are certain simple things that every company will have, and that, you know, it's like a framework that we have to follow everywhere. Like there are some keywords and basic principles governing an audit, and I would like to deal with them. Independence and integrity. This is important. We need to have an unbiased approach. Confidentiality. Now this, I'm sure all of us will agree that we have access to so much information of our client that it needs to be kept confidential. Now we, as those who sign the audit reports, would agree that yes, we don't disclose, we always know how it is to be safeguarded, etc. But have we made our articles understand this? Our articles also have access to our clients' data. And they also need to understand that they cannot openly discuss our clients' data in public places, say a train when they are commuting. They tend to discuss their problems or queries. We need to make them understand they are not supposed to do that. Skill and competence. Now, this is very important. To whom do we assign work? Is he competent enough to do it? So if in my team I have 2 articles, 2 CAs, and 1 partner who's going to sign the audit report, I need to ensure that the work given to the article is enough for his competence. It should not be beyond his competence. work performed by others. Now, audit is definitely a teamwork. You cannot have a single person doing audit of a company. Not possible at all. There are so many things that have to be covered. So as a chartered accountant, as an auditor who's going to be signing the audit report, I will delegate work. I will assign work. Okay, do it. But you remain responsible for the opinion that you have shared. If I sign the audit report, I am responsible for the opinion that I have made. I can delegate work, I can use the work, I can rely on that work, but I am responsible for the audit opinion. And this is something that we need to make our entire team understand. That if you are delegated some work, please see whether you can do it or not. If you cannot do it, you inform us at the right time so that we can give you added help. It cannot come to us on the last day of signing the audit report that an article tells me, oh, I didn't know that I have to do this. No, it has to be a proper progressive approach. Audit planning, like anything that needs to be done, it has to be planned. And likewise for audit. Like we need to tell our team, these are the pointers that need to be done. This is the work, this is the time that you can take for this work. Every plan has to be time bound. A good plan is one where I know by when I have to complete my work and my supervisor knows when he has to come and supervise the work. There has to be some kind of coordination. Audit documentation. This is something that, sometimes we as chartered accountants don't take it too seriously. We feel, हाँ हमने बात कर ली है, हमारा ओरल डिस्कशन हो चुका है, अभी हमारा अंडरस्टैंडिंग है, हमको पता है क्लाइंट ने ऐसा क्यों किया. No. Oral conversations can always be denied on a future date. The best approach is you discuss it orally, jot down the minutes, take it on an email, send it across to your client, get an acknowledgement. Take a printout of this sheet, put it in the audit file. 2 reasons. 1, it is an evidence now for you in the future. 2, what happens here is, if tomorrow I am not there for this client, my successor should know what was done in the previous. By just opening the audit file of that year, he should have a clear idea of whatever things were done and understood at that period of time. Documentation saves us in future in terms of proving our own vigilance. To prove that we were not negligent at any stage of audit, we need to have proper audit documentation. Audit evidence is obviously of utmost importance. We do audit to collect audit evidences. These are bases on which we conclude or we give our opinion. So we will have our parameters to decide which evidence is more reliable, which evidence is better than the other evidence. So for example, the evidence that I collect myself as an auditor is the most reliable evidence. So if I go and do stock taking, if I go and do cash counting, that is the most reliable audit evidence. Vis-a-vis the client telling me ये हमारा stock paper है या ये हमारा cash balance है on 31st of March. Likewise, external evidences are more reliable than internal evidences. So these are small things that we need to keep in mind. Internal control system and accounting system. Now, every client of ours will have these 2 systems, the internal control system and accounting system. As an auditor, I am interested in accounting system, correct? But the internal control system is going to affect the accounting system. Simple thing, when I go to a bank, I always check, are there CCTV cameras? Is there a security guard moving around? Does the cashier keep changing all the time? Is the branch manager being rotated? Why am I doing this? My money is safe in the bank. I want to know whether they have adequate control measures. If there is a CCTV, I want to check, do you have backups of the CCTV? If I ask for a particular day's CCTV, can you bring it to me promptly? Okay, When I see the security guard, I want to be certain that this person does not participate in any kind of collusion with the other employees. I want to be sure that the branch manager is rotated at periodic intervals, because that is going to help everybody understand that the head keeps changing. So you cannot do any kind of fraud with the help of the head of the branch. These internal controls, if they are strong, if I know that this bank has all of this in place, I am very happy to go for a test check. I know that the accounting system will also be stronger. So my assessment of the internal control system affects my procedures for the accounting system. It helps me determine how much vouching verification do I need to do. Finally, I want to conclude and report. So I'm going to report on whether true and fair view exists or not. I'm going to decide whether I want to give a modified opinion or an unmodified opinion. An unmodified opinion is a clean opinion. There's no problem at all. But a modified opinion could again have either qualified, adverse, or disclaimer, depending on whatever facts and circumstances of the case are. So if I find something very material, but not pervasive, not having a far-reaching effect, I give a qualified opinion. If I find something very important and having a far-reaching effect, I give an adverse opinion. If I'm unable to come to a conclusion, if the client constantly restricts my scope of audit, I may have to give a disclaimer of opinion. Please understand that we have the ability to change our report. We do not have to give a clean opinion. If we come across observations which warrant a modified opinion, we must do so. We should not feel threatened by the client. This is what independence is. Moving ahead, we have Audit and Companies Act 2013. There are a few sections which we will be covering as regards appointment of auditor, removal, their remunerations and all of that. Until now, if there is anything we want to discuss or ask, we can do it. Pooja, is there something we should discuss?
So I think you have very well covered all the points. Only thing that I want to, like really harp on is the audit documentation. Now, considering, the past frauds and, every day almost we keep hearing about something or the other. Plus, because of the QRRB, which is now going to come up and, put all the audit companies under the scanner, it is very important to maintain proper documentation. So what we do as a practice in our firm is that we maintain everything online now. So we do have physical files, but we do maintain everything online. And now that you have Teams, where you can store all the data, which is accessible to everyone, we do that so that in case if somebody, is not there in office and they want to refer something, they can always do so. So these are some, and also because now of the audit trail provisions, the one thing that you mentioned about the accounting system, again becomes really important that you have to maintain the books of accounts up to date.
Yes.
Because if that objective is achieved, then I think that audit trail problem shouldn't really arise.
Perfect. Definitely. And coming from Bansi Mehta, as a person from Bansi Mehta, which is quite a large size firm, this is something that all of us can also adapt to in our own ways. Like they would have a better way of storing data. We could at least use cloud, if nothing. If nothing, we can definitely buy some data space on cloud and store all our data there instead of just having physical files. True. Yes. Thank you. We are going ahead with the Companies Act. Okay. So we have some provisions wherein we have appointment of auditors. Now we all know that the auditor needs to be appointed in so many days. And what I want to stress upon is before appointment, we have to give a certificate to the client saying that if you appoint us, it would be within the ceiling of the number of audits. This is something very important, but sometimes we may, overlook. We may say it's okay, nahi diya to bhi theek hai, ab appointment to ho gaya. No, let's follow procedures. Why am I saying so? Because now with the new Companies Act 2013 and the kind of penalty provisions they come up with, and they put us to jail for very small reasons. Let us not do anything that invites trouble. So first and foremost, the client will approach us. Will you be our auditor? We say yes. If you appoint us, this would be within the ceiling, the number of audits that I can accept. We give this. Then let the client appoint us in the proper meeting. Give us an intimation that we've been appointed. Simultaneously, the client also should inform the ROC that they have appointed XYZ as an auditor. In a large company, they will have audit committees which will help in the appointment process. That is, they will filter the person who should be appointed. Audit committee presents it to the board of directors. The board of directors, if they do not agree with it, can send it back for reconsideration. And finally, an auditor is appointed. So the audit committee at times will help the company in appointing an auditor. Reappointment is something that small CA firms do face a lot. Like we are reappointed recurrently for the smaller companies. I'm not talking about the companies who have to strictly have rotation of auditors. So that is different. Smaller companies, they generally have this faith, एक बार एक CA select हो गया, जैसे we don't change family doctor. We are going to the same doctor since I was a baby. I'm going to that person. I'm still going to that same person. Till he does not die, I will go to him. Something like that we do with chartered accountants also, where we have faith and trust in that person. We tend to appoint him again and again. No problem. Let there be reappointments, but ensure that it's properly followed. The retiring auditor can be reappointed if he is not disqualified. There is no written notice to the company of his unwillingness to be reappointed. So if this particular auditor, the person who is retiring, his tenure comes to an end, if he says, I do not want to be reappointed, then there is no automatic reappointment. It's a personal service contract. You cannot be forced to do it. There is no special resolution passed to appoint some other auditor. Also, there should be no special resolution that we will not reappoint the same person. At times, what happens is, in the AGM, the company has proposed, let us appoint Mr. A as auditor and not Mr. B, who's a retiring auditor. If Mr. A does not accept this appointment, it does not mean B is automatically reappointed. When the company has decided that they want to go for A and not B, it obviously means that B is not to be reappointed. So there are no automatic reappointments in a situation where the company is considering other appointments. So we have to be careful of when the company gives us a consent form or gives us an intimation that you are appointed, we must check the resolutions thoroughly. The rotation of auditors is something that is applicable to larger companies like listed companies, public companies with paid up capitals of 10 crores more, private companies with 50 crores or more, so on and so forth. Now here what we have to ensure is, if we are an auditor of such a company and I'm a proprietorship concern, I get one term of 5 consecutive years. That's it. Beyond that, I need a gap of 5 years. So if I am AG Mehta and Associates and I was an auditor of, say, TCS Limited, which is a listed company, I can be auditor for 5 consecutive years, then a 5 years gap, then again 5 consecutive years, I can be auditor. Likewise, if I'm a firm, if I'm a partnership firm, I get 2 terms of 5 consecutive years each. So in a total span, it's 10 years. Then again, there has to be a gap of 5 years. So if I am, say, Deloitte Haskins and Sells, and I'm the auditor of TCS Limited, I get a tenure of 10 years. Then for the next 5 years, Deloitte or any entity related to Deloitte cannot be auditor of TCS. I am stressing on any entity under using the brand name Deloitte. This is important because the whole idea is we don't want the same person to be the auditor for a very long period of time. So if there is, this is a very beautiful example given where outgoing auditor and incoming auditor have a common partner. If this company has rotation applicable to it, the XYZ being the outgoing auditor and ABZ being the incoming auditor, it's not allowed. This Z has a disqualification. The outgoing auditor has finished 2 terms of 5 years each and now need a gap of 5 years. Each partner is disqualified when the firm is disqualified. When this partner goes to another firm, he carries the disqualification with him, which means now the entire ABZ is also disqualified. So for example, if TCS was being audited by XYZ for 2 terms of 5 consecutive years each, can ABZ, again Z, be the auditor of TCS? The answer is no. There can be no commonality between the outgoing auditor and the incoming auditor. That's important for us to mind, because sometimes what we do is we have partnership firms where, the partners are more or less the same. क्या करेंगे हम, ये वाले फर्म में पहले ऑडिट ले लेते हैं, फिर दूसरे फर्म में दूसरे साल का ऑडिट ले लेते, not understanding that the partners are common. The same partners, they carry the disqualification with them. Okay. Now, sometimes the question that comes up is, do we have to change the person who's signing the audit report? Like, for example, if there is a partnership firm who is doing the audit of TCS, let us say Deloitte, they are given 2 terms of 5 consecutive years each. Say Mr. A is a partner who signed for the first 5 years. Can he sign for the next 5 years also? The answer is yes. It is a firm's choice. The firm can decide whether they want to internally rotate the auditor or not. If they do not want to, it is completely acceptable. Filling of casual vacancies, again, a lot of times auditors do get removed, or they attract disqualifications, or sometimes the auditor resigns. In that situation, vacancies are created and they have to be filled in. Again, there is a procedure for the same which we should follow. Again, there is professional ethics which tells us if the job which is being given to me now was earlier being done by another chartered accountant, then I must always communicate with this person first before accepting the job. This is our professional ethics. So we do not take up audit just like that. We definitely communicate with our predecessor auditor and then take up the work. Certificate and consent by auditor. Yes, this is what I was discussing. So before appointment, we must ensure that we give a written consent to the client saying that, okay, if you appoint us, it will be within the ceiling. And then on appointment, the client has to give us a notice of appointment and also inform ROC in the relevant forms. This is something that I wanted to discuss, removal of auditor before expiry of his term. Now, this sometimes what happens is when we know that the client is not doing right, when we know that this particular client will finally get a modified opinion, and we have to communicate our observations with those charged with governance, like we have to tell them that, look, we are observing this is a weakness, this is not right, or this needs to be changed, we are giving you an opportunity to change. They may threaten us to remove us. They may threaten that we will remove you as the auditor, we'll find somebody else who will give us a clean report. Should we be scared? The answer is never. The answer is that you cannot be removed without getting an opportunity of being heard. So there has to be a general meeting in which they have to remove an auditor, and at that meeting, the auditor will get an opportunity to present himself, to give his side of story, that why is he being removed. So we do not have to worry that the management is forcing us to give us a clean sheet when it actually warrants a modified opinion. Be strong, be independent, be unbiased, collect all your evidences and have adequate documentation. Give a modified opinion. Save money of those people who invest in such companies. That is very, very important. Please understand, we are not people who are working just to earn money. It's a noble profession, right? There are a lot of people who have faith on our signature. And that is why we should not be threatened by our client when he says, I'll change you if you don't give us a clean check. Resignation by auditor is also possible a lot of times, because what happens is we ask our client, give us this, give us that, show us your records, show us your books. And the client says, Arey, jaane do, aapko last mein tally data bhej dunga. अरे अभी आप ये मत लो, आप ओरिजिनल मत लो, आप सर्टिफाइड कॉपी से काम चला लो, अरे बैंक स्टेटमेंट का कंफर्मेशन नहीं ला सकता हूँ अभी, मैं बाद में लाऊंगा. What he is doing is he is restricting the scope of your audit. If you feel that this is not right, that this is not how you can function as an auditor, feel free to resign, but follow procedure. If auditor resigns, he has to file Form ADT3 along with reasons within 30 days of his resignation to company, ROC, CAG. CAG is Comptroller Auditor General of India, but this is where it's a government related entity. Otherwise to company and ROC. Failure to file Form ADT3 will obviously attract penalty. So we have to file this. At the same time, do not forget to give your reasons. It could be restriction on scope of audit, and we must flag. 144 special notice for not reappointing the retiring auditor. Again, this we've already discussed. So this is possible that you don't want to reappoint the retiring auditor. No problem. But the retiring auditor will get an opportunity of representation. So at the general meeting, he will be asked, he will be given an opportunity of being heard. So again, our independence is secured by law. We should not, we should not surrender our independence at the whims of our client, not bend down to their opinions. Power of NCLT to order a change of auditor. This may happen where a national company law tribunal gets an application from company or any aggrieved person, or when it itself is satisfied that an auditor is acting fraudulently, or he is helped or is participated in any fraud, then they can order to change the auditor. Now, these things do happen, and that is why we should be 100% sure of what we are signing. Eligibility, qualifications, disqualifications, this is something we already know. We have to be a CA having COP. The firm or LLP, then majority of its partners practicing in India are qualified for appointment. That is, they should be chartered accountants who hold certificate of practice. Today, we are allowed to have a partnership firm with lawyers, with company secretaries. And also we generally do this because we want to give an umbrella of services. Like whatever our client needs, we want to be able to give that service to him. And that is why we have partners who are also lawyers, partners who are CAs, and partners who are company secretaries. Completely allowed, but majority of your partners have to be CAs having COP so that you can take up audit in the firm name. Your disqualifications are you cannot be a company. You have to either be a proprietor or a firm or LLP. These are the only 3 ways that you can do audit. You cannot be officer or employee of that company. You cannot be connected to officer or employee of the company. You cannot, you or your relative or your partner cannot hold any security in the company or subsidiary or holding company or associate or subsidiary of such holding company. Now, there are lots of things here. You know, when I was an article in Big Four, every day morning we would get an email saying, now don't buy shares of this company. Now you can't buy shares of that company. Tell your family not to buy shares of this company. Now, as such as articles, it wasn't very applicable to us, but they would shoot it out to the entire organization as such. Why were they doing so? Because there are disqualifications. As an auditor, I cannot have interest in my company who's my client. I cannot be indebted to it for more than 5 lakh rupees. I cannot give guarantee or provide security in connection to indebtedness of another person for more than 1 lakh rupees. So if I fall in any of this, I get disqualified. And if I get disqualified, it's a casual vacancy and I have to leave the audit of this client. Now, you may feel कि relative को इतना ज़्यादा अपन कैसे बोल सकते हैं कि बाबा तुम मत hold करो. Don't invest. Like my relative would be so many, right? My lineal ascendants and my lineal descendants and my siblings. All of them are my relatives. Just because I am a chartered accountant and I want to be auditor of this company, I cannot tell all my relatives that you sell off all your shares. They have said, okay, you can keep it up to 1 lakh face value. So the holding of relative can be up to 1 lakh face value. If it goes beyond, you get 60 days time to bring it back to 1 lakh. If in 60 days you are not able to do this, then no. Okay, I see a question. Can spouse of employee of company be appointed as auditor? So, sir, for employee, there is no disqualification. But if the spouse's relative is a director, then, so if a chartered accountant's relative is a director, then he cannot be appointed as an auditor of that company. For example, if this is TCS Limited, question of sir is, if I am the chartered accountant and my husband is employee of TCS, just an employee, I can be auditor. But if my husband were to be the director of TCS, then I cannot be appointed as auditor. The disqualification is if you are related to the director. The partner or officer or employee, here this word partner has not been interpreted as spouse. Here the word partner has been given business relationship and not a spouse. And that is why it is not falling under the disqualification. Moving ahead, individual or firm having a business relationship with the company, subsidiary, holding company, associate, subsidiary of holding or subsidiary of associate. Now here the business relationship can be a transaction for commercial purpose, except those services which are permitted under the Chartered Accountants Act to be rendered, and those services which are in the ordinary course of business and at arm's length. Let's understand this. Say, I am a CA having COP and I want to be auditor of Bharti Airtel. Can I be an auditor? Yes, I am a CA having COP. But now I, on my phone, use a SIM card, the network is of Bharti Airtel. Now I have a transaction for commercial purpose with Bharti Airtel. However, this is an ordinary course of business. Bharti Airtel gives this SIM card to anybody and everybody at 500 rupees. To me also it is given at 500 rupees. It is an ordinary course of business at arm's length. Chalega. Another example. Say it's HDFC Bank and I want to be auditor of HDFC Bank. Okay, I am a CA having COP. I have taken a loan from HDFC Bank to buy a house. It's a transaction for commercial purpose. Now it needs to be checked. Is it in ordinary course of business? Does HDFC Bank give housing loans? Yes. Are these housing loans given at 9% interest, the market rate? Yes. Is my loan also at market rate 9%? Yes. So it is at arm's length. It is ordinary course of business. चलेगा. यही चीज अगर मेरे को हाउसिंग लोन 2% पे देता है HDFC बैंक, when the market rate is 9%, then नहीं चलेगा. You are disqualified from being an auditor. An individual being a relative of director or key managerial person of a company. That's what we just discussed. So if my relative is a director or a key managerial person, then I cannot be auditor in this company. If I am in full-time employment or the limit of 20 company audits has exceeded, then again I am disqualified. If I am convicted of an offense involving fraud and 10 years have not lapsed from the date of conviction, I cannot be an auditor. In HDFC Bank loan account, other condition of indebtedness would not be. Yes, of course, everything needs to be checked, whether everything is at arm's length. Like if everybody gets a monthly installment payment, I should also get a monthly installment payment. If the bank loan is for 10 years, my loan also should be for 10 years. Everything, the interest was just an example, but all the terms and conditions have to be at arm's length in this particular point over here. Okay. Moving ahead, I was talking about fraud. Now, I was at the beginning also saying how, we should not certify any document just for the sake of certifying it. We should be able to support it with proper evidences. Now, why do I say this? Because under 148, 149, if we are caught and we are found guilty of fraud, then maybe we get a punishment of 1 year or 2 years. But understand that this particular point here disqualifies us from taking up audit for 10 years. It's a very long period of time. 10 years have not lapsed from the date of conviction. First, in India, the matters don't come up on board so quickly. Like, I come from a family of lawyers. I know how my father has seen certain matters running through ages. Sometimes I feel those matters will come to me also, and still there will be no conviction. वो चलता ही रहेगा. तो एक तो आपका वो इतना सारा लंबा time waste हो गया to get a conviction. Once convicted, then 10 years stuck. You are not allowed to do any audit. It is not worth signing a document. Please understand and appreciate. It is not worth signing a document without checking. Individual or firm directly or indirectly gives any services which are so listed under section 144. If you do any of this, like if you write the books, you cannot audit the books. So if you're doing accounting, bookkeeping, internal audit, then you cannot be statutory audit. So there is a long list of services which if you provide, then you are disqualified from being an auditor. Now, directly, indirectly, the word here has significance. What happens is, in this big four, okay, so sir, I will take up this question a little later. Multi-purpose empanelment form, there was something I couldn't read it completely, but we'll take it up later. Okay, so here we were discussing directly or indirectly. What happens with these big fours is, now the way they work is, they have smaller partnership firms inside, correct? So a Deloitte would have a CC Chokshi, would have an SB Bellimoria, and would have a lot of other smaller CA firms who run under the brand name Deloitte. Now what they do is CC Chokshi becomes internal auditor, SB Bellimoria becomes stat auditor. This is now not allowed. Why? CC Chokshi, SB Bellimoria, both working under the brand name Deloitte. So directly or indirectly, this term is very large and is connecting all of these persons and says if SB Bellimoria is the internal auditor, then CC Chokshi cannot be stat auditor because they are working under the same brand name of Deloitte. That is also another reason why we will come to this topic a little later, how the Big Four is now planning to split up and how this will have a huge opportunity for the smaller mid-sized firms that we should, work on and try to get the best out of it. We'll discuss it a little later, but at this point, what I want to say is these list of services, if you provide them, then you cannot be a statutory auditor. Moving ahead, we have remuneration. This we know, we discuss with the client, we get it signed. It is always better to have a written documentation of your remuneration. There are special provisions with respect to government company audits when we do that. The CAG, we submit our report to him. He can always complement and supplement that audit report. He comments on it. The branch audits are also done. So again, if the branch is in India, then we can do it, or we can have a branch auditor. If the branch is outside India, a person so qualified to be auditor in that country can do the audit and send us a copy of the branch audit report. Auditor to comply with standards on auditing, this we already know. We have ICAI recommendations and we have NFRA doing it for us. These are certain things that maybe the older chartered accountants have not done this, in academics, but now everyone has to follow it. The standards on auditing have to be followed as and when they become applicable to us. Cost audit, again, yes. If you are a production, processing, manufacturing, mining company and the government has asked you to maintain cost records and get a cost audit done, then we as stat auditors will also have to be doing it. Yes, Pooja, sorry.
Yeah, so this is one practical issue that, we had just faced last year. So we were doing an audit of an educational company. Now, because it was an educational company, all this while it was assumed that the cost audit was not applicable to them. Okay, but the whole point being that, whenever we have to report something in Caro, we do not rely on what calls we have taken in the previous years. Every time we do Caro, it is advisable to read the section again with the
Correct.
rules, because
Correct.
then we found out that, this educational company cost audit records were applicable. Luckily, in that year, the limits for cost audit did not get exceeded,
Apply.
and therefore cost audit did not apply, but cost maintenance of cost records did apply. So we had to kind of give a negative view in the Caro, saying that, the cost records have not been maintained at least for that year. And then, of course, the client, probably from this year, they have started complying with it. So, yeah. And one more thing I just need to add, when it is bigger companies, almost all sections are always applicable to them. So there it
Yes.
is not an issue. But when these are small growing companies, we have to be really cautious with respect to the limits, because, all these, like say, audit committees section, the nomination and remuneration committee, these have different kind of limits. So as
Yes.
soon as it gets exceeded, they have to start complying. So this is
Correct.
also one thing we faced, that, it was a growing company. So they didn't really, all these sections were not applicable to them. But in that year, they had exceeded the limits. Okay, and therefore we had to give an emphasis of matter in that sense. I mean, of course, that really depends on whether you want to give a qualified opinion or you want to give an emphasis. That's a different thing. But
Right.
these are certain things we have to concentrate in a small and a mid-sized company.
Yes. Because we always have to make our client understand that ignorance of law is not an excuse.
Yes,
Just because you did not know that this law was applicable to you, that does not mean you will be left scot-free. Like, you will be punished, right?
correct.
There will be punishments, and that is why we must be vigilant to the changing laws also, and to our changing client as well, just as you rightly pointed out. When we
Right.
see growing companies, we have to be more so vigilant.
Correct. And just one thing, because now, because, the Companies Act, there are a lot of rules, regulations, and for each section, there would be probably notifications, circulars. So there, like what I do is I have an app of Companies Act in my phone itself. So if I have to refer to a particular section, I go to that section, and that particular app has links to all the rules, all the circulars, all the notifications at one place. So you need not
Oh, wow.
again and again refer to, because every time you'll have to keep opening up different material to arrive at one particular conclusion. So yeah. Yes.
Sorry, I had a small problem. My son just came to show me how his t-shirt is wet. So I'm so sorry for that.
No
Yes.
problem. Yeah.
Yes.
So I will share the name of the app, and
Yeah,
I
please
think
do
it'll be
share
pretty
the name.
useful.
I was
Yes,
just going to say the same thing, that
correct.
it's going to be so much useful to everybody, all of
Yes.
us here. Okay, should we move ahead, Pooja?
Yes, yes, ma'am.
Yes. Okay. Perfect. So, just as Pooja was mentioning, how at times we may not be cost auditors, but we still have to check that whether cost records, if required to be maintained by our client, are actually being maintained by them or not. Signing of audit report is by the person who's appointed as the auditor of a company. Of course, the audit report can contain qualifications, observations, or comments on the financial transactions that have an adverse effect on the functioning of the company. These are to be read at the general meeting, and they are open to inspection by any member of the company. Auditor, okay, this is something that has changed over the years. Auditor to attend general meeting. A lot of the senior chartered accountants may feel that attending general meeting is our right. That we have a right to attend general meeting, which means if I don't want to come, I will not come. If that day I am busy, then I will not come for the general meeting. No. Companies Act 2013 has very clearly said your right is to receive notice and other communication relating to general meeting. It is your duty to attend the general. Auditor may attend himself or send an authorized representative Again, this authorized representative also needs to be qualified to be an auditor. So I cannot send my article as jao beta tum general meeting attend karke aao. No, this is not allowed. The person you are sending must be authorized such that he has to be a chartered accountant. Only then that person can be present in the general meeting. Because if anybody wants to raise a question on the audited financial statement, this person has to be in a position to give a reply. Now the next line says, company may exempt an auditor from attending general. Company may exempt. This is a choice of the company, but it's the duty of the auditor. Another right we have is to be heard at the general meeting. We have access to books and vouchers, to call for informations and explanations. We have certain duties wherein loans and transactions, if made, they should not be prejudicial to the client. We should check whether if I'm giving the loan, if my client is giving a loan, it has been properly secured. If it's a company which is not an investment or banking company, then the assets which are sold, they should not be at a price less than the cost. That is, you should not be selling off assets. Desperate sale नहीं होना चाहिए, क्योंकि अगर वो situation है तो it flags going concern assumption. It may be that the company is not going to be a going concern in the near future. So any kind of sale that a company does of its assets, we should always check, is it a sale at profit or at a loss? Whether loans and advances made by company are being shown as deposits. Again, loans and advances are different, deposits are different, their treatments vary. And that is why they cannot be exchanged. Whether personal expenses are being charged to revenue account. So for example, a director's personal expense should not be charged to the company's P&L account. The shares which are mentioned in the books of accounts as being allotted for cash, then check whether cash has actually been received. By cash, I don't mean physical cash. What I mean is there should be receipts in the bank account. If a share has been allotted for cash, then so much of it should be deposited in the bank account. Duty to make a report. The auditor will present his audit report to the members at the AGM on the accounts examined by him in the financials laid before the company general meeting. In his report, he is going to comment on the true and fair view. He's going to say that he's done everything as per law, the standards on auditing and the accounting standards. He will talk on the principal assertions that I have got all information, that proper books are maintained. Basically, what I want to tell you is that ये सब आपको check करना है. जब आपने check कर लिया तो आप बोल सकते हो हाँ, everything is fine and I'm giving a true and fair view. If you give an adverse remark, which you may, you only have to substantiate it with reasons. Other matters which are to be included in audit report include impact of pending litigations. Now, this is something which is very important and we must also give adequate significance to this. I remember there was a period when this particular company called Maggie had they could not make any sale for 1 year. They were banned by the courts. They were not allowed to make sales. Now, a company like Maggie, obviously the stock expires, so that is a loss. They have made huge advertisement expenses. So that is also now wasteful, because for 1 year, if you have a ban on sale, you also have a ban on showing your advertisement. So in such a situation, the litigation, which is there in the court of law, which is not connected with me as auditor, is having an impact on the financials of the client. And that needs to be provided for. Any provision for material foreseeable losses, any delay in transferring funds to the Investor Education Protection Fund, dividends declared or paid are they in compliance with Section 123? That is, once paid, it has to be transferred to a separate account, and within so many days, it has to be given away to the shareholders. All of those things have to be complied with. So there are certain things for financial year on or after 1st of April 22, accounting software feature to record audit trail. And this has to be operated throughout the year. This is something that Pooja also mentioned at the beginning, how they have their documentation with the audit trails now coming in. There can be no tampering and it has to be preserved as per statutory requirements. Just because my data is online does not mean I can, I do not have to store it. I still have to preserve it for 8 complete financial years. I have to give reasons for any negative remark in the audit report. So if there is any negative remark which I make in the audit report, I will substantiate it with my audit evidence. Reporting of fraud by auditor, this is something we just dwell upon a little. As auditors, when we come across fraud, the first thing we do is we inform the audit committee or the board of directors that, look, this is a fraud that we have seen, we have observed, this is a misstatement, it looks intentional. We are giving you time to rectify. Okay, so we wait for a reply from the audit committee or the board. They reply, very good, we still report to CG, central government. They do not reply, we report that we have informed the company. They have not replied, and I am informing the central government. If a fraud is more than 1 crore rupees, even if the client says, हम सब कुछ ठीक कर देंगे, हम books को rectify कर देंगे, it is our duty to inform central government. Failure to do so will attract penalty. So we have to inform Secretary of Ministry of Corporate Affairs in a sealed cover. Registered post has to be sent along with an email. The report is on auditor's letterhead where all our details are mentioned in Form ADT4, signed with our seal and membership number, saying this is the fraud observed in so-and-so company, it amounts to so-and-so rupees. We have informed the client, this is the step taken by the client, or that the client has not replied back to us. Either which ways, communication has to be made to central government. If the fraud is of less than 1 crore rupees, then we just inform the client. We tell him, ये fraud है, इतना approximate amount involved है, ये parties हमको लग रहा है कि involved है. Company will disclose it in the board report, will also mention what remedial action that they have taken. If they have corrected it, they have not corrected it, whatever action has been taken by the company has to be disclosed in the board report. If auditor reports to central government, he is not guilty for breach of any of his duties because this is done in good faith. See, if finally it turns out that a fraud nahi tha after investigation, can the client come and now reprimand me saying you breached confidentiality? The answer is no. What I did was in good faith. I believed it to be a fraud. It was worth so much money. And it is my duty that I have to inform it to central government. And I have complied with my duty. Again, auditor, cost auditor, company secretary, you don't follow this. If it's a listed company, you have a penalty of 5 lakhs. If it's an other company other than a listed company, there's a penalty of 1 lakh. So it is our duty to basically flag a fraud. If a fraud is of more than 1 crore, we bring it to central government's notice. If it is below 1 crore, we inform the company, but we will ensure that in the board report, the company has mentioned this fraud. Punishment for contravention, as I was telling you, Companies Act 13 has become very stringent and it is no use taking panga with the government now. Sections 139 to 146, if you don't follow it, company will have a penalty of 25,000 up to 5 lakh. We'll have officer in default 10,000 to 1 lakh. For an auditor, it is 25,000 or 5 lakhs or 4 times the remuneration received, whichever is less. So if my remuneration is 1 lakh rupees, so 5 lakh or 4 into 1 lakh, 4 lakh, whichever is less will be the maximum amount of penalty. There must be an intention to, however, if there is an intention to deceive, then you will also face imprisonment up to 1 year. Minimum penalty becomes now 50,000. Maximum is 25 lakhs or 8 times your remuneration. This is still nothing as compared to the fact that for now 10 years, you are disqualified from accepting orders. अगर आप ये नोटिस करेंगे, ये सिर्फ 1 साल के लिए आपको जेल भेज, but आपका disqualification continues for further 9 years, total 10 years. If auditor is convicted, he will refund the remuneration to company and pay damages to the company, stat body, the members, creditors. for losses arising out of incorrect or misleading statements. If auditor is a firm, the liabilities of the partner concerned and of the firm. Criminal liability will be only to the partner who acted in fraudulent manner. By criminal, what we mean is who will go to jail. Only the partner who's actually acted in such a fraudulent manner, only that partner will go to jail. Yes. If there is something you want to add, Pooja, in our companies.
Um, So, one practical difficulty that we had faced, that see, as an auditor, it is not only important to have knowledge about Companies Act, but when we are reporting, we need to have knowledge about the other acts also. So, for instance, what happened was that in one company, the financial assets of the company, as well as the income which they were earning from that financial assets, exceeded 50% of the total assets, you know. So it was so in that case, the previous auditor, they were not reporting about the fact that as per the RBI Act, this particular entity deems to be an NBFC. So, at the time of accepting the assignment, this is what we noticed. Of course, we told the client that, this qualification and everything will come, and only in that event would we accept the audit. So these are certain things, we need to focus on, like, because I always tell that an auditor's job is really difficult, because at least in case of income tax, you have to have knowledge about income tax only. Whereas in Companies Act, when you are reporting as an auditor, you need to have knowledge about RBI Act, you need to have knowledge about PF Act, ESIC Act, and other things like that also.
Yes.
So, yeah.
So sometimes, reading the minutes of the meetings of the company also helps. It just helps us understand that what are the progresses that they are making, what are the kind of strategic decisions that they are taking, which will have an impact because there are other laws getting affected.
Correct. And mainly because the client was ideally into manufacturing, it was into manufacturing, but the only thing happened that, they gave loans to subsidiaries, and they were also earning interest and things like that. And that is how it exceeded 50%. But, so as a manufacturing company, probably you would not pay attention to what the RBI Act says, because you will never imagine that to apply. But that is how it happened. And, we had to give qualifications and things like that.
And absolutely right, because giving a qualified remark now makes the client also realize from next year what all things he has to follow.
Exactly. Correct.
Right? And also saves us from getting caught in the future. Yes. So true. The next thing that we have is Companies Auditors Report 2020. Now this CARO 20 is now what is applicable to all of us. It applies to all companies, including foreign companies. It is not applicable to banking, insurance company. Of course, they have their own laws and they follow that. Like a banking company will give a long form audit report. A Section 8 company, because it's a non-profit organization, they are the erstwhile Section 25 companies. So they are not given the applicability of CARO. Again, one person company is kept out of it because it's a small company. The money involved is only of that one person. So we don't want CARO applicability. Also, small companies are kept out of the purview of CARO. Certain private limited companies are kept out of the purview of CARO. What we want to discuss here is those points that we have. The property, plant and equipment. Now, some things that we need to keep in mind is there has to be physical examination. Just because balance sheet में अपना fixed assets में दिख रहा है, इतना property है, इतना plant है, इतना ये है, और हमने title documents देख लिया, सब कुछ ठीक है, okay, no. Physical verification must be done at reasonable intervals. I'm not saying this has to be done by you. Let the client do it. You ask the client, have you done it? Have you observed any kind of complication? Has there been any mismatch between the actuals and the recorded values? If the client comes up saying, "Arey, हमने तो check ही नहीं किया," now is the time for you to do a surprise visit. Correct? अगर client बोलता है, हाँ, हम every 6 months check करते हैं, हमको पता है किधर क्या है, etc., and he seems confident enough, you may not do it. But your duty is to ask whether the physical verification has also been done or not. See, we have accounting standards to help us with valuation. But अगर कोई चीज real में exist ही नहीं करती, तो उसको value करके क्या मतलब? Physical verification does become very, very important. Also, when your client starts selling off assets, we must always know the reason for the sale. We must know, are you going to be a going concern? What is your strategy of sale? ये सेल करके जो पैसा मिलेगा उसका आप क्या करोगे? Are you going to reinvest it? Are you diversifying your business? These are questions that I will have to ask as an auditor. Sometimes, so again, as Pooja very rightly said, it's not just company law that we have to consider. There are so many other laws also which play a role, like Benami Transactions Prohibition Act. We have to check that all the property of the company is properly held in the company's name, which is possible only by checking the title documents. If everything is fine, no problem. If there is Benami property being handled by the client, then it needs to be flagged. Inventory. Again, the stock of the client needs to be physically verified at reasonable intervals by the client. It is not our job. We have to ask, आपने किया, आपको क्या मिला? Is there any discrepancy? Is it following, like a lot of clients have this barcode scanning system, where they say हमारा तो barcode scan होता है, तभी out होता है, तभी in होता है. Okay, do a surprise visit, see if this actually works. Surprise checks are really useful for large companies because you cannot do 100% checking. And when you cannot do 100% checking, you must ensure that the internal control systems are strong. For that, surprise checks play a very good role. Yes, Pooja, I think you have something to share.
So in relation to inventories, what we have observed, that what people do as part of accounting, that as soon as the invoice is generated, they either book the sales, okay, but here it is very important firstly to see what were the terms. So for example, it leaves my go down, but my responsibility or my risk and rewards transfer only after it reaches the client's, go down. So till that time, the goods would be my goods. So in that case, what they normally do, okay, you remove it from inventory, but show it as goods in transit. Okay, and so what people do, like what we faced in the past, that, they don't make such disclosures, because as soon as the invoice is generated, they book the revenue and okay, then the matter is over. But in that case, to that extent, our CARO reporting also may not be correct, because as per CARO, for goods in transit or for goods lying with third parties, okay, you have to have some confirmation. And when the goods are in transit, you're supposed to disclose that in CARO. So, when your accounting goes wrong, your CARO reporting also to that extent might falter. So these are things which you have to keep in mind, especially in relation to inventory, as to when the risk and rewards have been transferred, and are these goods really mine?
Correct. So this is also done with the help of cut-off procedures. We follow just before the end of the year, we check whether whatever has been actually booked as revenue is actual revenue or not.
Correct.
And whatever has been, so a lot of times, as Pooja said, what they do is they show it as an invoice, they book it into their sales because they have budgets to meet. They have only so much time to meet that budget. As soon as April comes, wo sales return hota.
Right.
So for me as an auditor, I want to check whether these transactions which were booked so close to the end of the year, are they being reversed in the next year? So that is also a very important thing, as Pooja rightly said, that we must know when the risk and reward gets passed. Correct. Moving ahead, we have companies when they make investments, provide guarantee or security. If yes, we need to indicate the aggregate amount and the balance outstanding as on the balance sheet date. So when our client is giving grants, is giving and making investments or giving loans to others, it should not be prejudicial to the interest of the company. The repayment schedule needs to be checked. There should be regular repayments along with interest. Agar loan related party ko bhi ja raha hai, to bhi we must know what is the amount of the loan, what is the rate of interest, is it being returned, repaid or not. Intercorporate loans, investments, guarantees, securities, we have to check for compliance with sections 185 and 186. There is a huge list of things that need to be checked, that if you go beyond this particular formula, that is if you exceed this % of your share capital in reserves, then you need special resolutions, you need unanimous approval, etc., etc. So all of those things have to be complied with. Deposits, if company has accepted deposits from public, you have to check compliance with RBI directives and sections 73 to 76. Now, accepting deposit is like taking a loan, but not exactly a loan. In loan, you have to repay, whether the lender comes and asks for or not. But in deposits, it is only when the deposit holder comes and asks that I have to give it back. And that is why deposits and loans and advances are to be separately shown and to be properly accounted for. It cannot be mixed up. If central government has given a direction to maintain cost records, we have to ensure that they are made and maintained. Like Pooja gave us a very practical example of the educational company. It was educational institution which was required to maintain cost records but was not doing so. Ignorance of law is not an excuse. We are going to flag it in court. Statutory dues. We have to check whether the client is regular in depositing all statutory dues like the GST, the Provident Fund, the Employee State Insurance, income tax, sales tax, sales tax and service tax, custom duty, all of this as may be applicable. But yes, so whatever are the government dues, they have to be regularly deposited. If there is a dispute, the same needs to be informed in the car that there is a dispute of so much amount and where the dispute is pending, at which panel, is it ITAT or so on and so forth. Yes, Pooja.
Yeah, so now regarding this disputed dues, so let me point out that usually what people do, that, you know, whatever is shown in contingent liability, they show it as disputed dues.
Correct.
But it may not be necessary. Reason being, see, contingent liability may auditors or the company looks at the sustainability of the claims. If it is sustainable and if it is possible that the outflow is made, then okay, fine, I will show it as contingent liability. But if I know if some additions are frivolous, you know, it cannot be made at all. And this we are especially facing in this Ind AS in your companies where the assessments are being made, where they are just adding, you know, left and right. I mean, the AO. So in that case, if we know that there is no possibility at all, it may have happened that the company has not disclosed something in contingent liability. But when we do reporting under CARO, the requirement is only for disputed amounts. In that case, if we look at CARO, there they say that the auditors are not supposed to look at the sustainability of the dues or not. So as soon as there's some order, or probably if we have some order which is in our favor, but say the department has gone into appeal, then this will be considered as disputed, whether or not I've shown it in contingent liability.
Correct. So contingent, we show that which I'm ready to pay, but not today, in future. But
Maybe,
disputed has nothing to do with ready to pay. If it is something which there is a question mark on whether you will have to pay or not, it comes into CARO.
Yes.
Whether you want to pay or not, that's a different question altogether.
Right.
Yes. Great. Check for transactions which are not recorded in books of accounts. Are they surrendered or disclosed as income during the year in tax assessments under Income Tax Act? Now again, just because I am a company auditor, I cannot say कि मेरे को क्या करना तुम income tax assessment में तुम्हारा क्या हो रहा है. No, we want to check. Are they booking any additional income? Has that income come into our books or not? If there has been such additions to your income, check whether previously unrecorded income has been properly recorded in the books during the year. A lot of times this we will see with professionals or with smaller companies where they have a lot of cash incomes. They may not book it only, but फिर जाके income tax assessment जब होता है, open reopen होते रहता है, उनका book scrutiny होता है, तब काफी सारा income add हो जाए. Now we will have to ensure कि उनके books में भी वो add हो जाए. Default. In repayment of financial dues, state the period and amount of default as on the balance sheet date. If the company is in the willful defaulter list of any bank or financial institution, the same needs to be checked. Has the company changed the purpose of term loans? Now, term loans are loans which are, taken for a particular purpose. Like if I buy a car, I take a car loan. I have to buy a car out of that loan. I cannot change the purpose of that loan. I cannot use a short-term loan for a long-term purpose or a long-term loan for a short-term purpose. Company has taken any loan to meet obligations of its subsidiary or a joint venture company. Again, this needs to be flagged. Has company raised any loans during the year on the pledge of securities held in its subsidiary, joint venture or associate companies? If yes, you need to give a detail on the same and also check whether there are any defaults on such loans. So these are loans taken by my client, giving a security. I want to check whether it has been properly informed or not, disclosed or not in the financial statements. Money raised by way of initial public offers or further public offers, they have to be applied for the purpose for which those are raised. If not, the details and delays and the rectification needs to be flagged. Now, what happens here is there comes a prospectus before every publication. Now, in the prospectus, you have mentioned that I'm going to use the money for XYZ purposes. Please understand and appreciate that prospectus is a public document, which means whatever you write in the prospectus must be true. It cannot be an untrue statement. I'm not saying false. I'm using the word untrue. Untrue means partly true and partly false. ऐसा statement भी prospectus में नहीं चलेगा. Everything needs to be true. And when you have said you are going to use it for XYZ purpose, you cannot now change the purpose without informing the shareholder. That is not allowed. If you do so, I will flag it in CAR. Check whether company has made any preferential allotment or private placement of shares or convertible debentures. If yes, check for compliance of section 42 and that amount raised used for the purpose for which the funds were raised. Now, this is very, very important. Preferential allotments are when you prefer somebody over others. So if you have given any kind of shares which are preferred shares or where you have gone only to a limited public and said that only you can subscribe and we will only allot shares to you, such kind of private placements have to adhere to section 42. So you will have to comply with those requirements and only then go ahead with the same. Caro does not say you cannot do this. Caro only says if you have done this, we want to see the details. That's it. This is all allowed. Under Companies Act also this is allowed. But we want to ensure that you are complying with the Act. Check for any fraud. Have you noticed or reported any fraud? If yes, state the nature and amount of the fraud. Check for section 143 subsection 12 compliance. ये जो अपन ने discuss किया that we have to intimate central government if it's more than 1 crore. And if it's less than 1 crore, then we have to just inform the company. That needs to be disclosed that yes, we have followed it. Check for any whistleblower complaints. Now again, Companies Act 13 does try a lot to protect the whistleblowers. These are persons who bring to the notice that yes, there is some kind of fraud happening. So that needs to be, they need to be protected and that needs to be reported. If your client is a Nidhi company, then there are certain things that you have to comply with. If there are any related party transactions, then we have to check for compliance with the law as well as AS 18 and SA 550. You have to disclose who are the related parties. Why have you transacted with them? Is it at arm's length? If it is not at arm's length, then what is the difference? All of those things have to be reported here. Check whether the company's internal audit system is commensurate with the size and nature of its business. This is an addition. This was not there earlier. But now they want us to comment even on the internal audit system of our client. So the internal auditors का work भी हम थोड़ा सा check करेंगे. Report of internal auditors is to be considered here. They give a letter of strengths and weaknesses. We are going to read that report and comment on it here. Check for any non-cash transactions. If company, the directors or persons connected with him have done any non-cash transaction, you know, where the company transfers its asset to the director and says, abhi tum paisa mat do, this is adjusted in your remuneration. Such kind of transactions have to be reported here. Sorry. Check for registration under section 45IA of the RBI Act. This is, I think, something that Pooja was telling us before, how the client had become an NBFC. The client does not know that it has become an NBFC, but it has. Here we have to check whether it has obtained a valid certificate or not. Is the company running into cash losses in this financial year and the immediately preceding financial year? If yes, we state the amount of losses over here. Check for resignation of auditor. If he has resigned, then I will have to consider the issues, objections, or concerns raised by the outgoing auditor. Something I had mentioned even earlier, it is our professional ethics to communicate with our predecessor. So we will ask him, what is the reason for your resignation? Is there something that I should keep in mind while accepting this audit? Whatever it is that needs to be pointed out here as well. In auditor's opinion, there is if no material uncertainty exists as on the date of audit report, the company is capable of meeting its liabilities existing on balance sheet date as and when they fall due within 1 year from the balance sheet date. This would be based on the financial ratios, aging of your debtors, expected dates of realization of financial assets and payment of your liabilities, other information accompanying the financial statements, and auditor's knowledge of the board of directors and management's plans. So based on this, we try to comment on whether this particular client of ours is a solvent or not. I'm not talking about going concern now. I'm talking about the ability of my client to be able to pay its debts. अगर आज कंपनी बंद हो गया तो क्या वो अपना पूरा डेट पे कर सकेगा? That is my comment over here. If the company has transferred unspent amount to funds specified in Schedule 7. Now here what we are trying to talk about is the Investor Education Protection Fund. So if there are a certain amounts which have to be transferred to that fund, then the same needs to be done. Like for example, if there is unclaimed dividend, unclaimed allotment money, then after 7 years of holding it in a separate account, they have to be transferred to IEPF. So all those things have to be commented upon. Check for any qualifications or adverse remark made by auditor in the CARO, if included in the cash flow statement. If yes, the details of company and the paragraph numbers. Sorry, just one minute. This is consolidated financial statements. So if there are any adverse remark made by auditor in CARO of a company included in the consolidated financial statements of my client, then I will put it down here as well. So if I have my client who's a subsidiary and there is another holding company and there is another subsidiary company, let's say there is X is the holding of A and B. I am the auditor of A. The three together will make the consolidated financial statements. I am the auditor of A. If there is any negative remark made in B's CARO, that also needs to be flagged here because it is a part of the consolidated financial statement. If in audit report, if any question of CARO is unfavorable or qualified, the audit report will give the basis for such answer. If auditor is unable to express his opinion on any specified matter, the audit report will indicate such fact together with reasons as to why it was not possible to give an opinion on the same. So if there is restriction on scope of audit and my client does not give me adequate information, I can put it down here that I do not have adequate information, that my client is not giving me data. And that will be written down over here. Okay. Is there something that we should discuss on CARO?
Yeah, so I just have few points that, probably I would have come practically in during audits. So starting with clause 2B, where now there's this requirement, where we have to comment on the working capital loan. Okay.
Yes.
So there, the issue that we had faced was whether unsecured loans and there were some assets which were other than current assets also they had, pledged. But CARO reporting is only and only with respect to secured loans and that too on the current assets. So if there are some loans which have been taken otherwise, on basis of security other than current assets, then we need not report that in CARO. Okay. Next is there is always this issue where they use advances in the nature of loans. So we had an occasion to just evaluate that. So usually what was happening that the client was considering those advances, but this was pending since, maybe 3-4 years. And based on the confirmation from the client, they were saying, no, they're not going to repay it or they're not going to get the repayment within 1 year. Now, in such events, this advances really is akin to a loan, because advances are usually short term in nature. So, there in that particular client's case, we said, no, this is not advances. And this, this is advances in the nature of loans, and hence we'll have to report that in Caro. But really speaking,
a lot
this
of
really,
times, just to stop here, a lot of times what happens is, so this would be a company, it would be a large scale, and that is why it is doing things like this. When you see professionals and they show advances, okay, from their clients, they are trying to say that these are in the nature of advances in terms of loans, but actually it is income.
Correct. So,
but they reflect it in advances. I mean, this is another way of putting. Yeah.
So really speaking, when you look at these words, we sometimes tend to just ignore it. Okay, no, this is not advances in the nature of loans, but really it will depend on each circumstance and each particular case, right?
Correct.
Okay, now next is, in relation to compliance with sections 185, 186. This is, of course, I'm talking about financial statements. So what we've observed that, there are companies which have complied with all the provisions, but they are not disclosing it in financial statements. Now, as much as we've interpreted the section to be, whether or not you have complied with 185 186 or not, disclosure under section 186 subsection 4 is required in financial statements. Okay, so this is one thing again that we'd observed that, clients were not doing. Now, next thing with respect to 185, 186 was also, so this is what had happened. There was a holding company. It had purchased the land, but through its subsidiary company, because of certain local laws due to which the holding company could not purchase the land directly. So the question which arose was whether this, and whatever amount the subsidiary would be paying to the seller, that the holding company would fully reimburse without any profit element and things like that. So the question was whether this would be, whether approval would be required or not. Under section 186, holding subsidiary are exempt from, the provisions of compliance, for the purpose of compliance. But under section 177, which is audit committee, they refer to the transactions referred to in 186. Now, transactions may sometimes what we say, this is reimbursement and therefore would not be covered. But the answer is no. Even if it is a reimbursement transaction, the same will be covered. And hence, though 186 compliance may not be required, but compliance under 177 was required, and therefore approval was required to be taken. So, these sections where audit committee and 185, 186 are very, very interlinked. So when we take a particular decision, we need to look at the overall picture, not only restrict ourselves to one section. Second thing was that the client was saying, no, we will not be able to take the approval right now. So is ratification possible? The section clearly says that, this has to be prior approval, firstly. And even and all these sections are really matter of governance. Okay. So in case of large companies, as a matter of governance, we never advise the client to ratify it unless it is very much, it's very difficult. Otherwise, we always tell them, no, you take prior approvals for all these kind of transactions. So this is one thing. Next point was, in case of deposits, 73 to 76, the ones which are actual deposits, that is fine, we comply and things like that. But this section also use deemed deposits. Now, this is very important because many times that, when the sections were initially introduced, we'd seen that there were advances from customers, and these advances were going in the financials for more than 1 year. Now, under section 73 to 76, these advances from customers which are not appropriated within 365 days would also be considered as deposits. So really speaking, if the client has not repaid the advances, or if they're not appropriated, then the disclosure should ideally come in the Caro. Second point is that many a times, these small companies, or like where the companies are run by family members, they keep getting loans from another individuals, and those loans are also actually funded by some other individuals. So it's like literally rotating of funds. So here again, under section 73, read with the relevant rules, we are supposed to take a declaration from that person who's giving the loan saying that these loans are not out of borrowed funds. Because if that
Correct.
is the case, then I mean, you're not complying really. So this is also one thing that the auditor has to go beyond the company and look at, what the individuals are also like, where they have got the funds from.
Correct.
Next thing is, okay. One thing again, in case of gratuity, usually I've seen a lot of qualifications because people do not get actual reports and things like that, and they just account for the gratuity on payment basis. In one particular client, we saw in the accounting policies that they're saying that they're complying with AS 15. The auditor has not qualified. What they were really doing, they had this LIC trust, so they were making gratuity payment to the LIC trust. So what they assume that this is compliance with AS 15, but this is not enough. What you are really doing, when you are making payment to LIC is just making payment towards contribution. AS 15 talks about making a provision as per actual report. So therefore, what the auditor was doing by not qualifying was not correct. They were supposed to qualify that AS 15 is not complied with in that case. Okay.
A lot
Next,
of times, understanding of the auditor is also not so thorough.
yeah, I agree, completely agree. But so what they had, when because we were doing some other assignment, but what they said, we are making every year we are making payment to LIC. So this is, we are in that sense complying. But the requirement is really you have to make a provision. Payment
Correct.
may or may not be equivalent to the provision. So that
Correct.
is what where we had come from. Now there was this one company where we've seen that, in the minutes and all, they were contemplating for a merger. Okay. But in auditor's report, they had not disclosed about the going concern. So as you had mentioned, if there is some sale of asset which is being contemplated, and if it is so huge that it might affect my going concern,
Yes.
then that has to come.
Yes.
Again, the client, probably the view was that, that going concern is only affected when my liabilities increase and, things like that, where it would, but it is not so. Even if you are a very solvent company, but if you have such major restructuring plans, so much so that the entire company would be merged into some other company, then definitely the going concern assumption fails there, and you are supposed to disclose that in your financial statements.
Absolutely right.
Yeah.
Yes.
Again, in minutes, we had seen that some major land was, it was being contemplated that it would be sold. So this particular fact has to come in financial statements, because we do have standards which says that discontinued operations, and if something is held for sale, then it has to be disclosed in that manner.
Yes.
So that is again one thing that, there was a flaw. Next thing was AS 10 is, and read with AS 13 now. Of course, in India now it is that way settled that, you have distinction between what is a property, plant and equipment and what is an investment property. So you may have some land or building, which is your own property, but you do not intend to do any manufacturing activities or something like that. And you're just holding that property to probably, give it further on rent and to earn rental incomes, or probably capital appreciation. What we saw in some of the clients, that they are not disclosing this separately as an investment property. So that is the requirement of AS. And as an auditor, we are also supposed to comment on the compliance with accounting standards, right?
Yes.
So to that extent, when you are not disclosing something as investment property, you have not complied with AS 13. So that thing has, that disclosure should be made accordingly. Next, one important thing again that, we had faced, which probably a lot of people are not aware of, our basic understanding about fixed asset cost is that, whatever actual costs are there, whatever direct costs are there, that should be the cost of my fixed asset. But AS 10 has now been revised to bring it on lines with Ind AS. Okay. Where what they say that, say if there is, and this usually happens in like, huge heavy manufacturing companies, and, where they have taken probably the land on lease, they're setting up the machinery. The agreement though says that after the use of machinery, and, whenever you're giving the land to me, you dismantle everything. Now, this dismantling cost, which I'm going to probably incur, say, after 20 years, what AS tells me today, you take the initial estimate of what the dismantling cost would be, and you add it to the cost of fixed asset.
Okay.
So what we were hitherto doing, that, whenever dismantling cost I'm going to incur, that time I will, provide for it or
Yeah,
whatever I will.
reduce it from the realizable value.
Correct, correct. But that is one major thing that we've observed. Of course, this may not be applicable to small companies and,
Yeah,
but this is
yeah.
one thing we face practically. So I'm just sharing. So this is one thing we need to take care of because of the revision in accounting standards, which has already happened like 4 or 5 years back. But we still observe that companies are probably not fully, complying with all the revisions that were made. So
Yes.
yeah. So, again, one practical thing that we've seen. So they had raw material inventory, and they had fixed their fixed goods, finished goods inventory. Now the finished goods now were expected to be sold at above my cost. So my NRV was above whatever the cost would be. But what the client was doing, that raw material NRV had gone lower. But again, so the requirement of AS2 is that if some raw materials are to be used in finished goods, and the finished goods will be sold at a profit, then you need not write down the RM inventory below the cost. So these are like fine distinctions which probably we kind of forget to comply with. So yeah, these things we need to take care of, and these are some things which I practically faced. So yeah, I'm just sharing it.
Yes.
Yeah.
It always gives us more knowledge when it comes from a practical experience.
Right,
So,
right. Yeah.
yes. Okay. The next thing that we are just touching upon is SA 700, 705 and 706, which deals with our audit report. Now we know that we have a format of audit report wherein SA 700 has very beautifully told us what all things we have to put in our audit report. So it will have details as regards the title being now an independent auditor's report. It will be addressed to members or those charged with governance. The auditor's opinion will identify the financial statements, the entity whose financials we've audited, the financials that are audited, the title of each such statement, the notes, the summary, and the date and period. So this is going to be our first paragraph, that we identify who we are auditing. Unmodified opinion in a fair presentation framework will begin with, we give a true and fair. And in a compliance framework, that is a banking, insurance, electricity company, there it will start with, in accordance with the applicable framework, this is our observation. The basis for opinion paragraph will always follow the opinion section. It will contain the following: that the standards on auditing have been followed. We will describe what are the auditor's responsibilities, and that auditor is independent and he has sufficient and appropriate audit evidence to justify his audit. So here, this is the place where we say that I have done my audit properly and that I have enough evidence to substantiate my opinion. I will also comment on the going concern, whether SA 570 is being complied with or not. If there is any key audit matter that I have observed, that I want to bring it to the notice of my readers, I'm going to put it under SA 701 over here. Responsibility for financial statements is that of the manager. This is always to be remembered and always to be noted down, that we are not responsible to make your books. You will make your books. You will have an internal control system. You will follow the going concern assumption and you will prepare financials which will give a true and fair. My responsibility is to check whether everything has been properly done or not. I only have a reasonable level of assurance. I do not guarantee the financial statements. I'm not a guarantor. Like if I go to a doctor and I ask him today, am I okay, doctor? I have no symptoms of anything. The doctor cannot guarantee that I am fine, because there could be something running inside me that is wrong. Like my lungs may not be working properly, or my heart, or there could be blockages in my veins, or anything which is not visible, not apparent right now, something which is latent. Just like how a doctor cannot certify that you are healthy, just like that an auditor cannot vouch for you being healthy or not. The auditor only has reasonable level of assurance, and on the basis of that, he gives an opinion that it is true and fair. You cannot catch hold of an auditor unless he has been negligent. Like if he's been negligent, that is, he's not performed his duties properly, he's not documented, he's not collected evidences, then yes, the auditor is responsible. Always understand that materiality is of utmost importance. That we do not check everything, we check things which are material. And what is material may be very circumstantial. That needs to be always underlined or, highlighted, that we comment on material items only. Other reporting responsibilities, if there is like Caro, then that has to be a part here. The date of auditor's report will be mentioned, place, signature, along with his membership number and the firm registration number and everything. Supplementary information. If the client is providing any other information apart from the audited financial statements, it has to be clearly differentiated. It is to be a separate part of your book. It cannot give an impression to a reader that that information has also been audited by us. We have audited only this document of so and so period. Bas, full stop. You cannot put your budget next to it and say, हाँ ये भी audit हो गया है. Yeah, you cannot put your estimated financials and say, हाँ ये भी audited है. वो सब हमने audit किया नहीं है. It has to be clearly distinguished. 705 deals with our modified opinion, where again we have very beautifully covered how if something is material but not pervasive, not having far-reaching effect, we can give a qualified opinion. If something is material and pervasive, has a far-reaching effect, we give adverse. If we are not able to obtain sufficient appropriate evidence, if it is material but not pervasive, again we give qualified opinion. But if it is material and pervasive, we give a disclaimer of opinion. So based on our observations, if we find something to be material, something that has important but has not been clearly done, then that needs to be flagged in terms of we have to modify our opinion. Of course, if we do so, we have to give the reasons for the same, and that needs to be informed. Here it is very nicely explained that what if management refuses to remove these restrictions? What if management imposes restrictions on scope of audit and now does not remove those restrictions? Step 1, I will communicate to those charged with governance, so the higher authority. If alternative procedures are possible, I will perform them and get my evidence. If alternative procedures are not possible, and I feel that this is something which is material but not pervasive, I can give a qualified opinion. But if I feel this is something which is material and pervasive, I will give, where I know that I might have to give a disclaimer of opinion, I will do so. However, if this is something very initial stage of audit, it is just the beginning and I understand that the client is not cooperating, not giving me documents, and that in future I will give a disclaimer, the better thing to do is resign. You should not carry on and, wait for the whole year and then give a disclaimer. If at the beginning itself you realize that there are going to be restrictions, the client is not cooperating, it is always better to resign, because we know there is a procedure. We can give our reasons, we can inform CAG, we can inform ROC, we can inform the company, and then we are free. Next, we have the wordings of a qualified opinion, paragraph, adverse, disclaimer. This is something we already know. We have 706, which deals with 2 paragraphs, emphasis of matter and other matter paragraph. So emphasis of matter is basically those things which have been shown by the client, which does not change our opinion, but we also want to highlight. So the client has highlighted it, but we also want to stress on it, so we put it in emphasis of matter paragraph. Other matter paragraph is something which is not being highlighted by the client. I want to highlight it as auditor, but it does not change my opinion. To give you a simple example, let's say my particular company, this client of mine, is going to now change its CEO. Okay, the head of the company is going to change. His term of retirement is approaching. So the next year, we will have a new CEO. Now, generally for a company, they start training people to become CEOs. Like overnight, a person does not change. So there are trainings done. He's kept under the wings of the old one, and he's taught on the job, etc., etc. Now, as an auditor, I feel that this company does not have a good replacement. This is something I can put in other matter paragraph. This fact that the company does not have a good replacement for CEO is not affecting my past financial statements. No way. I don't need to modify my opinion. It is something that I want to inform the readers that this company may have a change in the strategic decision makers and they may not have a good replacement. I can put it in other matter paragraphs. Something which has not been highlighted by client but highlighted by me. Again, something very important to note, emphasis of matter and other matter paragraphs. They are not substitutes for modified opinion. If you need to give a modified opinion, it has to properly fall under modified opinion paragraphs. Okay, so this is about it. Do you want to add something, Pooja, to the audit report standards?
No, ma'am. I think I've actually covered it during Karo. Yeah.
Okay. The next is the, so this is something that I was just looking upon and I realized that, you know, the big four that we keep talking about, this is probably going to split. Essentially because what happens is when they, when under their big brand name, they give this audit service and other services, they are actually, what do you say, compromising on their independence. And when this happens, they obviously get caught up in various frauds. So what the Big Four wants to do, especially EY, is they want to split up their consultancy service and their auditing service. Now, if one of the Big Four does it, it's a matter of time that the others will also follow. And when they do it, when they split up, when they become Big Eight again, it was Big Eight, it became Big Four, and now again, if it becomes Big Eight, what happens is it opens up a lot of business opportunities for smaller firms. And we can, grasp those opportunities only when we give services which are at par with. So Big Four gives services wherein, you know, they follow all the standards on auditing. They are aware about the latest laws and regulations. They keep themselves abreast with the changes. If we are able to do this as small and mid-sized firms, then the huge market that opens up comes to us also. And that is why we should work on making our skills better every day. I have always believed in this very good saying of Mahatma Gandhi ji, live as if you were to die tomorrow and learn as if you were to live forever. So we have to keep reading, we have to keep learning because that's the only way how we can convert opportunities into money, right? I mean, when the Big Four splits up, or even if it does not, if we show services which are at par with them or even better, when we can come up with, you know, so what is so significant about the Big Four is that at times how they come up with these notes or how they come up with their own budget analysis, which are so, relevant and so to the point and so prompt. If we are able to do it as the law changes, if we are able to bring out our own notes for our clients, it is going to help us in the long run. So thank you very much for this patient hearing, and thank you, Pooja, for so beautifully supporting the entire presentation. Also, thank you to Gen CA Federation for giving me this opportunity. I would like to rest here and we can take up questions if there are any. Pooja and me could do it simultaneously. I don't think there are any questions, are there?
No. Oh.
Yeah, Ankita, just one question. Often
Yes.
we get key audit matters when we mention in the audit report. So,
Yes.
how to identify those key audit matters? What really will fall in that key audit matters?
So anything, sir, that you feel should warrant a modified opinion, you don't put it. You put it properly in the modification pack. But something which is material, something which should have attention of your readers, of the users of financial statements, then we should flag it up in the key audit matters. Something that does not warrant a modification, primarily, but is important. Pooja,
So
can you add to this?
how will you differentiate between key audit matters and emphasis of matters?
So emphasis of matter is something that has already been informed by the client and it is there in the financials. So, for example, say a small fraud or say a small change in the systems, or they've changed the method of accounting or their depreciation or some other way of valuing their assets. If they have done it, they have disclosed it in their notes to accounts. But I want to stress on, I put it in a emphasis of matter paragraph. In a key audit matter, I put my observations, which are not there in the financials, which are important. I can put it under key audit matter paragraph. Pooja, I think you were saying something.
Yeah. So, for example, like one thing that we've seen, say in India's companies now, we have this provisioning, this concept called as expected credit loss, which is like provision for doubtful debts. So, what we've seen is that till time, till date, the client was following certain percentages and we were fine with it. In one of the years, they changed the percentages for doing the provisioning. So, there, what we showed that as KAM, just to show that what were our audit procedures that we had adopted to kind of look at the entire thing and why the change happened, and what are the procedures that we adopted, which we thought would be important, because that way it was material and was not an emphasis of matter, but yeah, we just wanted to highlight it.
Yes.
So does it mean that
They also do it for better transparency. There are a lot of things we communicate with those charged with governance. Throughout our audit, there are a lot of things that we observe and we communicate to them. Some things out of that date which remain unresolved, or some things which we feel are material, but they do not qualify modification, we can put it in the key audit matter.
so the example which Pooja took, so if there is a change in ECL policy where there is a substantial, they are taking hit of ECL in, let's say, uh, stage 3 provision. Earlier they would take 30%, now they are taking 50% because of whatever calculation they have done. So that becomes a key audit matter, or if it is a management overlay, then also it will become a key audit matter.
No, sir. So because of the, materiality of the amounts, okay, that we had shown it as KM. Of course, there could be in some of the clients where there was, very minor hit, we've not shown it as KM. But in this particular, so it really depends firstly on company to company as to what they want to show. But we thought that here we had to put an additional, we had to adopt additional procedures and, to ensure that what the client was really doing was okay. Because then why, like, at the time of adoption in days, they did not take these percentage, and what things have changed, in the interim period to change the percentage thereafter.
So you mean to say that there was changes in the ECL rates itself?
Rates itself, yeah. Yeah, because
management overlay, we will not consider.
I wouldn't say it would be a complete yes or no as an answer. But it really, really depends, because in one of the other clients also the rates had changed, but it was not very substantial, and we didn't feel it was so material that, to warrant disclosure in the audit report itself.
Okay, so it will all depend on the materiality of the amount.
Yes, sir. Materiality and, how much in that sense. So basically what we do is whatever presentations we put before the management, in relation to any major thing that has happened during the year, we usually put that in our KAM matters, because these are something which we want to communicate with the management as well as with the investors in that sense.
Okay, and could you throw some light on the recent NFRA circular regarding identification of reporting of fraud by the auditors, even though if it has been identified by the client itself?
Ma'am, you want to say something?
Sorry, I missed it. Sorry, what happened?
Could you throw some light on the recent NFRA notification?
That circular is actually stressing upon our duty of 143.12 only, no? That we should be reporting fraud adequately to the company audit committee and then to the government as well.
No, so the guidance note of our institute mentions that if that fraud is being identified by the management, we did not have the responsibility to report it to. We do not have to report to the government. It is only internal. Those charged with governance, it's okay. But what that circular mentions that it is now your duty also, even if it is identified by management, then also it becomes your duty to report it.
But I feel this should have always been, because the Companies Act will have to like it, that is more important, right? Like the institute can give us guidelines, but we'll have to follow Companies Act at the end of the day. And if that is telling us that we have to report frauds to central government, then I think that needs to be done. The circular is only stressing on this particular topic, that you will have to do it because
But
institute gave guidelines that nahi karoge to chalega. So the
our guidance
NFRA
note was very clear. Our guidance note was very particular. If management has identified it, it is not your duty to report it.
correct. So 143.12 actually begins with if the fraud has been identified by the auditor. If
Correct.
if he comes across any fraud, etc.
Correct.
Now
Correct.
the act never explains how you come across the fraud, right? If the client tells me or I find on my own, the effect is I've come across a fraud. So to save myself from those penalty provisions, it is better that I report it to central government if it is more than one.
Okay, so fine. So in your opinion, so now what will have now? This is a practical issue because based on the guidance note, we have not reported. Suppose let's say we have not reported the fraud which was detected by the management in 2019. Let's say. So now, by virtue of this circular, this is only a circular, which is a sort of a clarification because it is given by way of circular. So
Yes.
does it mean that 2019 ka you will again have to report, you will have to follow that procedure of 45 days and everything you will have to report then?
Now it cannot have a retrospective effect, but say you've not done it. Say the circular was not even there. What would you do? You would not report it to CG.
No, we have
No,
not
what you
reported based on the
exactly based on the guideline of the institute, we will not report to CG. However, with the new circular, then what we can do is a circular can have only a prospective effect, right? It cannot go back unless it is so specifically said that it's got a retrospective. So then we'll have to take care from now. I mean,
Fine. Thank you very much.
yes, thank you, sir.
Yeah. So any more questions? Yes, anybody? So let's just wait for a minute and see if anybody has something to say. And then I guess we can close the meeting. Meanwhile, thanks to you. Thanks, Ankita ma'am, for the theoretical insights. And a great thanks to Pooja for giving us practical insights. This combination was really great for understanding, getting a good understanding on the Karo specifically. So I think I can say that we got to learn so many things today. So we have already read things, but when it comes to practicality, so Pooja also gave a very good insight on practical aspects.
Thank you, JCF, and thank you, Ankita ma'am, for a wonderful presentation.
Thank you to all of you for contributing so beautifully and for making this happen.
Yeah. Thank you, ma'am. So yeah, Abhay, do we have anything else now?
Sakshi, you can invite Abhay for the vote of thanks.
Yeah. So Abhay, let's have a vote of thanks.
Yeah. So it gives me immense pleasure to propose a vote of thanks. I would like to thank our today's subject expert, C. Ankita Mehta Surana, for briefing importance of audit. Heartfelt thanks to our value enhancer, CA Pooja Jain Porwal, for throwing light on the topic with the practical aspect. A huge thanks to our JCF Mumbai President, C. Amrit Porwal, for his continuous guidance and support. Special thanks to CS Sakshi Jain for hosting today's session. Sincere thanks to all our members and participants for attending today's session. So friends, Karma Charcha is a concept wherein, according to the tax calendar, we will conduct education session every month. So stay tuned and stay connected. Thank you. Thank you, everyone.
Thank you, everyone. Thank you.
Thank you, everybody. Thank you, Sakshi. Thank you, Ankita ji. Thank you, Pooja.
Thank
Good
you, Ankit.
session,
Thank you
really.
so